All right, let's talk Choice Hotels. They just dropped their Q3 numbers, and man, it was a weird one. On paper, it looked like a miss on the most important metric, but then the stock, it just took off, jumping over 6%. So what in the world is going on here? This is one of those classic earnings reports where you really have to dig past the headlines to find the real story.
Okay, here's how we're going to break this all down. First, we'll hit the raw numbers. Then, we'll get into what's really happening behind the scenes. We'll cover their guidance, the market's reaction, and then we'll wrap it all up with our take on what comes next.
All right, first up, let's look at those headline numbers and that very surprising reaction from the market.
So here it is, the central puzzle. On one hand, you've got a miss on adjusted earnings per share. I mean, that's the number everyone watches, right? But on the other hand, the stock pops 6%. That tells you right away, Wall Street was focused on something completely different. And when you zoom in on the details, you really see this weird split. Revenue? A solid beat. Adjusted EBITDA? A new record for the company. Awesome. But then, bam, that miss on adjusted EPS. It's that exact contrast that tells the whole tale.
Okay, so to figure out why the stock rallied, we have to ignore that EPS number for a second and look at the huge strategic shift happening under the hood.
And this slide says it all, really. It's like you're looking at two completely different companies. The U.S. business, kind of soft. RevPAR is down. But then you look at their international operations, and it is absolutely on fire. We're talking up nearly 10%. That's more than enough to get investors excited.
And this isn't just a fluke, a one-time thing. They are aggressively building out their future money machine. A 54% jump in new global franchise agreements, year over year. That's huge. They're basically planting the seeds for a ton of high-margin royalty fees down the road.
And management isn't being shy about this either. The CEO came right out and put this incredibly bold target out there for everyone. He's telling the street, hey, look at us. We're going to double our international profits by 2027. They are screaming from the rooftops that this is the new growth engine for the company.
So now we can circle back to that confusing EPS miss. Here's what happened. Their official GAAP number looks massive, but that's because of a one-time gain from buying their Canadian business. But the adjusted number, the one that's supposed to show how the core business is doing, got hit with some temporary costs from that same exact deal. The market saw this and basically said, okay, this is just some weird accounting noise, not a real problem with the business. And they looked right past it.
Okay, so let's shift gears and look forward. What did management say about the future, and how does it tie into this new international story?
And this is where it gets a little tricky. They actually raised their forecast for EBITDA for the full year. That's great. But at the same time, they guided down on the U.S. business and even trimmed their guidance for that all-important adjusted EPS number. A real mixed bag.
And you can bet the analysts on the call jumped all over that. You could almost hear them scratching their heads asking, wait a minute, how can you guys be so bullish and talk about doubling profits, but at the same time you're cutting your guidance for this year? They really pushed management to square that circle.
So with all this conflicting info, good revenue, a messy EPS number, mixed guidance, why on earth did the stock rally so hard? Well, it all boils down to one thing, expectations.
You absolutely have to see this in context. Look at where the stock was coming from. Over the last year, it got crushed, down more than 30%, while the market and its competitors were doing just fine. The sentiment was just awful. The bar for this earnings report was basically on the floor.
And this wasn't just a slow drift up either. The trading volume exploded, 2.5 times normal. That tells you big money was moving. Investors were clearly braced for disaster. And when they got not disaster plus a compelling new growth story, well, they piled in. It was a classic relief rally, plain and simple.
Okay, so let's put it all together. What's our take on Choice Hotels from here? What's our thesis?
For us, it really just comes down to this one question. This is it. This is the whole ball game for the next year. Can this new, supercharged international growth engine run fast enough to outpace the slowdown they're seeing back home in the U.S.?
So here's how we're building our rating, piece by piece. First, let's be real. The U.S. headwinds aren't just going to vanish. That's a cap on the upside for now. Second, this international growth is legit. It's a powerful new catalyst. And third, the stock got beat up so badly that a lot of this concern is already priced in, which gives you a bit of a safety net.
So all that leads us to our rating, market perform. Look, they've done a great job selling the street on this new global pivot. It's a believable story, but now they got to prove it. It's officially a show me story. The next few quarters are all about execution and showing that this can actually turn into real, clean, consistent earnings growth.
And of course, just a final reminder for everyone, this is our analysis, but it is not financial advice. You've always got to do your own homework.